Hi everyone, it's Chris here from Serene Education. I'm just going to be doing the four majors, and this is going to be the last recording for 2014. It's the 19th of December, Friday, the 19th of December. Serene Education is going to be closing shop until the new year. So I just wanted to give a quick, brief outlook for the four majors going into the last couple of weeks for 2014, and then hopefully we'll see you guys all nice and fully rested for 2015. So going to be starting with the euro against US dollar. Let's have a look and see. So going to give you pretty much an outlook on how I go about putting my charts together. Always starting with the monthly time frame. Ideally I like to get a real understanding of where price is trading in terms of long-term sentiment, major support and resistance levels, primarily because the last thing we want to be doing is heading into or trying to trade a 15-minute time frame or 30-minute time frame or an hourly for that matter without knowing where price is trading on the bigger time frames. And here is euro against US dollar on the monthly. And the first thing that strikes you is that we had a major move to the upside, a correction from 2000 right up to the highs in 2007. And since then, we've actually seen price moving backwards and forwards, but however, still being dictated to negativity. The highs getting lower as we've moved through the years from 2007 onwards. And at some point too, when prices moved to the downside, she's actually corrected herself at a specific point, which happens to be in and around the institution moving average. Clearly, you can see through 2010, in fact, the latter part of 2009, 2010, we had a support level being forged here at the institution moving average. Yet again, another one happened through the 2011-2012 period, and you can see where price is trading right now. The hard right edge is where we're making our money. We need to know where price is trading right now in conjunction to what's happened in the past, and you can see that the institution moving average is clearly at the level where price is trading right now. So if we've had a physical support being forged where price is actually consolidated at the institution on two prior long-term occasions, then this could ultimately be happening right now, or could be an opportunity to see price actually consolidating or pausing at the institution like it's done in the past. So got to know that. You're not going to know that if you're looking at a 50-minute chart. You're going to know that if you're looking at a major time frame, stepping back, looking at the horizon, getting a pure view of what's happening in front of you. And that's what we do as traders. We've got to have an understanding of what price is trading or doing on those bigger time frames, because that will ultimately dictate where we should be trading or looking to take trades on the smaller time frames. So always, like a good artist, starting with a blank canvas, but then he applies the picture or the different types of colors, etc., to the portrait, the blank canvas in front of him. And that's what we're going to be doing. We're going to be now building a picture, looking at a blank canvas, and then working our way into the finer details when we head towards our daily and 4-hour time frames. So looking at the long-term sentiment, I've got the institution moving averages of my major support, and you can see that price has been moving within this range. So now looking for major support and resistance levels on this time frame, I've got an all-time low to an all-time high, and that's the first thing I'm going to do. I use fibs, and it's something that we're going to be teaching some of our new students going into 2015. So don't worry when you see me drawing all these and you're thinking, goodness gracious, I'm missing out on all the good stuff. I'm going to show you, myself and Nikki are going to be going into a lot more detail and teaching you guys some of the stuff going into 2015. Remember, we don't want to be moving or learning to trade currencies all in one day. You got to do segments, but we'll just feed small and smaller bits as time goes on, and you'll find that it will resonate a lot better and you can use it a lot better going forward. So don't think that you're going to be losing out. So let me crack on. Long-term monthly fib level, tend to do these in blue, and so I've got an all-time high to an all-time low, and the fib levels are predominantly going to tell me where I'm seeing major support and resistance levels. You can quite clearly see, as I mentioned to you, the institution moving average happening to be a major support in the past, but you can also see that the monthly fib level here, also back in the first support, was a major level of consolidation. Back again through that 2011-2012 period we saw the institution, but also the monthly fib level here becoming a support. And you can see now, looking forward into the last couple of weeks of 2015, and potentially for the start of the end of 2014 going into the start of 2015, you can see how the institution moving average is being tested right now. But we've also got the monthly fib level here just below us at the 121,359 and change mark. So if I just pan in now, you can quite clearly see how price has actually been moving between these monthly fib levels over the years. So it's vitally important that I'm well aware of it. Okay, major support and resistance above price. Notice how price has consolidated these levels in the past. So clearly one of the reasons why you should actually have these drawn on your charts. So now if I know that looking at the monthly that we're trading or thereabouts at a major support and resistance level, which has or happens to actually had a major impact on price there onwards. You could see through here 2010 going through to 2011. In fact, we had a major pullback, and vice versa. When price actually consolidated this level, we saw a major pullback through the following years. We don't know for a fact, are we likely to see another return to this prior long-term downtrend here? That's there to see. We don't know. We can only speculate that it might happen, but we don't want to be part of the speculators. We just want to be trading what's on the chart right now. So if I know that I'm trading into a major support and resistance level, you're going to find that price is going to be quite hesitant when you get to these levels. Okay? You're going to find there's going to be less selling sentiment or biased. People are going to be more hesitant, more aware of where price is trading right now in terms of that long-term support and resistance level. So you're going to find people are going to be selling very little, very hesitantly because of the fact of their long-term support and resistance level. The overall bias on the FX8 is one of negativity, but you can see the R-squared is not complementing a lot of that intraday time frame, especially the daily. In fact, as we head in, you can see that we do have all parts of our strategy template for the monthly. The red arrow, the candlesticks are red. The RMO is below the zero level. The OSMA is bright red and below the zero level. These are all telling us to sell. You can see here on the monthly that the R-squared is in fact complementing, but as you can quite clearly see here, the moving average, which is the 200 period moving average, is blue, and it's primarily because it's still below price. So it's going to be supportive, and therefore we have to be well aware of it. And you can quite clearly see where price is now in conjunction to the institution moving average. So very, very important. So when I drop down to the weekly time frame now, you can clearly see that the intermediate trend was very much the upside. Okay, we saw a major bounce on that last support and resistance. Here we go. There it is in all its glory. There we go. Through 2012, going into 2013. And that was the other bounce that we saw on that monthly fib level here, going back to 2010, in fact. And the closest one was this one over here. We saw this major move to the upside. But then we saw a correction. And that correction happened going into the start of 2014. Apologies. No new highs. And subsequently, we saw a lot of hesitation. But you can see the OSMA was predominantly fighting with a lot of that upside bias, and simply it price rolled over. And then you can see that we saw a major fall, and quite an aggressive fall over the last 5 or 6 months as prices headed back towards this monthly fib level here to the downside. And you can see how, as I mentioned to you, price has become very hesitant the closer she's got to this major support and resistance level. A lot of hard selling here, and then hesitation. This is predominantly the first pullback or consolidation or profit taking before, as we headed into this long-term support and resistance level. And you can see how price has become very, very hesitant over the last couple of months as we headed into this major support and resistance level below us, which is obviously quite predominantly there to see on your monthly time frames. You can see the weekly is still looking negative, and the R-squared is complementing a lot of that selling. And you can see this week, in fact, after last week's pullback, we're seeing a lot of that pullback being taken away or eroded, as now price is actually engulfing last week's candle. So it's telling us there's still negative sentiment to the downside. However, she would have to physically close lower than the prior 2 weeks of data. You can see that we saw prices trading lower. However, the bodies actually closed higher. So this is clearly a support level through the last 2 weeks. And if you look at the where price is trading in conjunction, we're quite literally there. But what I do is I also use a fib level on my weekly. So I've got a starting point, and I've got a point where price actually rolled over. So I've got my high point over here to my low point, the starting point. If I change on my weekly fib levels to red, so they really stand out, so I can clearly see that my long-term monthlies on blue and my weeklies on red. Very, very visual. And you can see how price has actually moved to these levels quite closely in the past. You can see over here we saw a lot of consolidation through 2013, in fact the start of 2013, and that was pretty much supported by a weekly fib level. You can see how price is actually consolidated over here, especially in near term. So notice the last couple of months how price has actually been trading below the weekly fib level. However, actually moving with a lot of indecision, a lot of speculative movement below that. It's still been capped by the weekly fib level, so the overall sentiment is still one of negativity. Even though she's been consolidative, the bias is still negative. Okay, the candlesticks are still negative. The RMO is still below the zero level. The only thing that's actually changing now, but it's still negative, is the OSMA. It's dark red. But that's ultimately going to happen as price moves lower. The MACD tends to, the histogram tends to move in the opposite direction. So that's clearly the state. It's still below the zero level. Okay. We have a red arrow. What's the last candle? Right up here, when we saw the actual negative shooting star formation, or the bearish engulfing candle at a major support and resistance level, this would have been the catalyst for the selling. And sure enough, since then we had the red arrow and the negativity. The start of that actually the bearish trend was blue, because we're still very much in an uptrend and we're still above the weekly fib level. But once you got below the institution, you started to see a lot of true selling coming through because it was trading below the institution moving average. And that's been the play of things. And you can see the histograms, even though we see a lot of consolidation, the histograms on the weekly have still been managing to play out lower histograms. So the sentiment is still generally directed to the downside. But we have to be well aware of that major support and resistance level below price, because now the closer we get to that level, the more risk is involved, because that profit target now becomes very, very squeezed. The profit target between where price is trading right now to that monthly fib level is a lot smaller, or a lot, so therefore you're taking a lot more risk on board when you're trading into major support and resistance levels. You have to be well aware of that. So now when I know that just by looking at my two time frames, monthly and weekly, I know that the sentiment for euro is still looking negative. However, it's going to look more consolidative in a negative trend because we're seeing a lot more hesitation. So when I look at my daily now, there you have it. You can see now on the daily we've had a lot of hesitation. Price has been ranging. It's probably the best word to use over the last couple of weeks. She's still managing to trade below the weekly, which is still telling us we should be looking to the following week low, or the monthly fib level low as our target. But you can see now a lot of these trades that you would have taken in would have actually been within a consolidated range. It's a very messy consolidated range. So we saw a bearish engulfing candle 2 days ago, but it was still above the prior support of December. So you would have looked, if you want to do a very aggressive trade, you would have looked at the lows of December as your first target yesterday. Now you can see not really a hell of a lot to trade, and your risk would have been tenfold because of that. That's entirely your choice. But you can quite clearly see that price actually yesterday hesitated or failed to close lower than the December lows. So ideally, that's what we want to see. We want to see price actually making new lows in a negative trend and new highs in a positive trend. Clearly, if we look in the euro, we've got to see new lows. That's not really been the case for December, in fact. And you can see where price is trading right now, or the support lows in December to that monthly fib level. There's an excess of 134 pips. However, you're carrying more risk if you're looking at trades on that time frame anyway. So your risk to reward ratio becomes quite an aggressive, riskier account. Okay, so you got to be well aware of that. So looking at euro going into the end of December or 2014, you're going to see if there is any movement, you're likely to see it quite aggressively moving into the monthly and weekly fib level below, and it should be probably very aggressive. You're going to have tight stops, you're going to have really aggressive entries, and you're going to take profits when they present themselves. That's going to be the play. So, and that's how you got to keep it. So if you are trading the remainder of this year, please ensure that you follow that you follow that rule clearly. Got to be very aggressive because we're trading at a major support and resistance level. Sterling monthly, there we go. A lot of corrections. We saw a lot of building through 2000 right up to the highs in 2007, and pretty much all that taken away in almost a full year. Quite sad to see a lot of building process to take us from 2000 to 2007, almost 7 years of building, and that all taken away within 1 year. of selling, and that's recession for you. Things fall a lot quicker than they move higher. So that's how it is. But what you can quite clearly see is over the years we've actually seen sterling falling and then moving higher. But you can quite clearly see that dictated by the institution moving average for a long period of those years after the recession. And what I do have is I have an all-time low, but I've had the start of the 2007. So that's going to be my monthly fib level. I call it the monthly fib level, but it's going to be our monthly major support and resistance levels. I use a fib level to dictate those levels. You can quite clearly see that price has actually been moving with these points or between these points over the years. And it just gives you an idea of how important fib levels actually are in trading. A lot of people are using them out there, so why not actually utilize or use what they're using? So it gives you a bit of idea of what they're doing and where they're likely to profit from. Monthly fib level, there we go, clearly the case. And if I drop down to the weekly, you can see that we had a major bull run for sterling against the US dollar since the mid part of 2013, and then we reached these highs up here the start of June, July of 2014, and then we failed to see any further highs, and then price actually fell over. This is primarily because of the undoing that we saw in euro, because of a close relationship or close ties with eurozone. That pretty much came back and bit us on the backside. What it does give me is a high to a low. That's all I want, especially when I'm doing my weekly fib levels. You quite clearly see the trend. We've seen a breach, prices making new lows. So where's the start of that uptrend we had? And that's why I'm using the actual weekly fib retracement, so I can actually gauge where my next likely target is to the downside if prices to continue in that negative movement that we're quite clearly seeing now on the weekly. And you can see that sterling has been very, very negative through most of 2014, in fact. So therefore, the trend is ultimately going to be negative. So I'm just going to make that well aware or to be seen on the charts. You can see the institution above price. You can see all my moving averages above price. The last arrow we actually had on the weekly was way up here, starts or mid-June and stuff. And you can see that we are trading below a weekly 38.2 fib level. At the moment, you can see how price is really started to slow down. Here again, you can see that we're moving into a monthly fib level below us, which happens to be a major support and resistance level in the past. A lot of consolidation occurred here through the start of 2013, in fact. So we're starting to see a lot of hesitation as we head into this major support and resistance level below us. And you can see we've got a lot of indecisive candles. Okay, I want you guys to see that. The candlesticks, very, very indecisive. Look at the start of this negative trend. A lot of bearish candles and not a lot of wicks. So telling us a lot of selling sentiment was genuine on this time frame. But then as we head into the institution, you can see a lot of indecisive wicks and heading into that just prior to that. But you can see now as we head into a major support and resistance level below price, you see a lot of indecision candles. We had a bull pullback in the prior week, but it actually moved into the 38.2 level. So if that was a change in market sentiment on a negative trend, we wanted to see this week, in fact, actually staying above the 38.2 to then target back up towards the institution. That's failed to materialize as we've seen a lot of selling for sterling through this week, in fact. And it's only now that we're actually seeing price actually pulling back against the US dollar, but it's trading into the underside of the 38.2 or the underside of the weekly fib level. So if you look down at our daily, you can quite clearly see that we have been consolidating, and look at that. Not a great range to trade. She's done really nothing over the past couple of months. Very, very hesitant movements, in fact, and you don't really want to be trading hesitation because you're seeing a lot more speculation, and all speculation does is gives you a lot of backwards and forwards. And this is where you start losing your account. You're not getting any genuine selling sentiment. And the one thing to notice is when you're trading the FX8, ideally you want to see your bigger time frames moving lower so that you can actually trade those intraday. And that's vitally important. So if you look at what's happened recently on the weekly time frame for sterling against US dollar, you'll notice that even though the RMO is still below the zero level, you can see the OSIMA has failed to get back below the zero level to give us an opportunity for a genuine selling opportunity. Remember, price, if she's in a negative trend, needs to be making new lows. Okay, and if she's not making new lows and she's not making new highs, then she's clearly in a range, and that's clearly been the case for price over the last couple of months. You can quite clearly see we haven't seen any new lows. In fact, price has actually tested the the December lows just recently, the November lows, but failed to actually break those going lower. And you can see the daily, in fact, there's a lot of negativity coming through, but you'll notice that we have the linear regression and the OSMA not clearly in our favor, and we want that. It's dark green, which is good because it's telling us now the bias to the upside is clearly not there. This is clearly not happening, and we are moving back towards that zero level. But predominantly, we are to look for any further selling opportunities for sterling. We need to make a new low, okay? And when she does eventually do that, we know where our target is, down here at 1536 and change. We know where our target is. We know what the potential profit is just by taking the level between those points in excess of 172 pips. I'm not going to get all of it because obviously our daily candle has to close lower. That's going to eat into a bit of that, but isn't more than enough on that plate to actually get a genuine trade if and when price actually gives us that. The moment now, the last candle was a blue arrow. The candlesticks are still red, so there's clearly no selling here at the moment. And when we do get a bearish engulfing candle close lower, ideally the OSM is going to be back below that in bright red. The RMO is going to be below. We're going to get a red arrow. The candlestick is already red, and that will give us a genuine opportunity to enter, and then we know where our target is likely to be and that's going to be to this level down here where our weekly and our monthly fib actually consolidate with each other. So that we want to trade this clean air in between where the support is right now to this major support below us down the side. Okay, keep it simple, guys. So all I've done, I haven't traded sterling at all over the past couple of months because she's not really given us any true selling opportunities. So look elsewhere. But I do have a trigger alert on the support lows over here to give me a valid opportunity if and when she crosses below that level. US dollar Swiss franc. If the euro is moving lower, then you'd expect the US dollar Swiss franc to be moving in the opposite direction. Swiss franc, very interesting one recently because yesterday morning we saw the Swiss National Bank actually cutting the interest rates to below zero, guys. First time. And the reason behind it is to try and to stop or to penalize people who are investing more than, I think it's 8 million euros equivalent into any of the banks within the Swiss, because they're trying to devalue the Swiss currency at the moment. Why would they do that? Because remember, the Swiss currency is a small economy surrounded by Eurozone, and for it to do business, it's got to have a currency that is on par with its neighbor. And if it's relying heavily on Eurozone to do a lot of its business, then you're going to find that Eurozone will not really want to be doing any trade with a currency with a higher value, obviously, because you've got to exchange your currency, cross-border trading, and that all adds up. Okay, so trying to devalue its currency to try and keep it on par with the euro so that it can keep its GDP, import and export figures on par is quite difficult. Swiss National Bank really doing something out of the norm, and they have a valid reason for doing it. How long it's going to happen, there's been talk it's only going to be a short-term measure. That remains to be seen. So very interesting. Swiss National Bank also very hesitant on what's happening in Europe, especially what's happening with Russia, the cost of oil dropping. Russia's lost half its value on the ruble over the past couple of months. It's been quite drastic. So there's a lot of hesitation and uncertainty. The Swiss National Bank has actually put in place these things to try and get things going in Eurozone. Okay, so what has it done though? You can see we've been in a negative trend for the US dollar has been very negative against a very strong Swiss franc. However, we've seen a move to the upside recently. But you'll notice the thing that really jumps out at you straight away without doing anything on here is you can see that price is now heading into an area of major support and resistance. We've clearly seen a support level here through 2008, 2009, 2010, which was a current resistance level. Support, break, resistance, and look where price is trading right now, guys. Back at that resistance level, or major support and resistance. You won't see that on a 50-minute chart. You won't clearly see that on a daily chart. You will, however, see this on a monthly and a weekly time frame. So hence the reason why it's so important to actually look at the bigger picture when you're doing your analysis. Cannot stop referring to that. It's so important. If you're well aware of these major support and resistance levels on these time frames, you're less likely to make stupid mistakes getting into trades where you're trading against major resistance or major support, and you're thinking to yourself, why the hell am I not being profitable on these intraday time frames? Because you're clearly trading into areas of major long-term support and resistance. You're clearly not going to be able to move the market. Being well aware of these levels on your bigger time frames will then dictate where you should be looking or trading on your shorter time frames. And I guarantee you now, you looked at US dollar Swiss franc and going, a lot of resistance above me, got to be quite hesitant, got to be quite aggressive my entries, and be quite vigilant. And that's what's been happening. You can quite clearly see, if I even pan onto the monthly time frames, just moving into those monthly time frames, the last couple of months, in fact, November, October, yes, they've been moving higher, but you can see there's been a lot of uncertainty because prices actually physically be pulling back through those months. Okay, so people have been hesitant. People have been into the trade and taking profit quite aggressively. Or what they've done is, since they entered down the bottom over here, these lows, they would have looked at this long-term level over here as a long-term target. And as you get closer to these target levels, they would have taken more and more off the table. Okay, you don't ever want to be trading between 2 points with 100% of your position open. You want to be taking percentages off the table the higher you get or the closer you get to your target levels. And that's clearly what's been happening the last 2 months, in fact. And we're getting a bit of upside at the moment now, primarily what's happened yesterday for the Swiss National Bank. That's going to be in the US dollar's interest. Weaker Swiss franc is going to be a positive for any cross currencies against the Swiss franc. And that's what we'll be seeing now. The US dollar rallying higher on that outcome on the news. But we'll see that as we go into the lower time frames. So now, going back to my long-term trend, you can see quite negative. The candlesticks are all very, very negative. However, you can see the monthly candle that's playing in right now. Oops, let me just zoom so you can see that. You can see it's blue. But I have until the end of December for this candle to actually physically close. And if you are trading a monthly time frame, then if you're looking to trade the actual FX8 template, then you would need to see blue arrow, which we clearly have. The moving averages which crossing over. So the 20 above the 50, perfect we have. The RMO above the zero level, that's not having the case now. The RMO is clearly trading above the zero level right now, but it's only because it's looking at the current candle. The OSMA, however, has been biased positive for the last 4 months. And this month, the histogram is getting even bigger. But clearly where price is trading right now and the candlestick. So we've got to physically wait for December to close. And if it's all hunky-dory and it's trading above the major support and resistance level, then it's telling us that there's a potential for January, February, March, April 2015 to be one of a biased bull upside. Make sense? Okay. So let's go back to my long-term. Going to draw my monthly fib levels on this. So I've got my current low way down there, the all-time low, to my current all-time high. And what I want to do is just change that color just to represent my monthly fib level. Bang! And look at that. Take that out of the equation, you can see that my fib levels have given me a clear indication that there's a lot of hesitation at where price is trading right now. Clearly support in the past, clearly resistance. So if price is trading within these two fib levels of here on my weekly, my daily, etc., I know straight away that my bias is speculation, a lot of hesitation, a lot of consolidation, a lot of ranging. That means if I'm trading that, I'm likely to carry more risk, because price is not directional. It's very hesitant. I hope that makes sense. So when I drop down now to my weekly time frame, you can quite clearly see, okay, so you can see price has been trading, broke above this fib level over here in 2012. But the institution moving average was above price. So that would have been quite an aggressive entry. And you would ideally like to, if you're seeing a strong and a bull move, you would like the institution to be below price of warning. No bull moves into the institution because you're still trading a lot of aggressive entries. That is still a negative signal, and clearly you can quite clearly see what happened. Here again, we were trading above the institution, but we failed to get above a close above the fib level. A lot of wicks, and clearly failed to see any new highs. And what happened? Price reverted to the downside. Now getting close to this side of here, you can see on the weekly, blue arrow. Candlesticks are blue, perfect. All my moving averages, including the institution, below price, which is a positive. The RMO is above, positive. The OSM is above, however, clearly dark green. We need to see a bright green one, and we need to see price trading above that weekly fib level. So if I look at what's happened recently, there you can see we had a weekly fib level close higher. We want to see the following week finding support to kick on. That failed to materialize. We had a bearish engulfing counter close lower. This week that's in play now is we've seen the total opposite. We've seen some more lows. However, the bias is still up because the candlesticks are still blue. So I'm still looking for positive upside. Remember, candlesticks are they really, really are fantastic, especially if you're trading the FX8, because as long as the candlestick stays the same, it's telling you the bias is still favoring the upside. Even though we had a consolidation a week ago, the bias is still looking long, and sure enough, this week we've seen more movement to the upside for the US dollar Swiss franc. And also concurs with yesterday with the Swiss National Bank actually dropping the interest rates. That's going to push the US dollar higher against a weaker Swiss franc announcement. And you can see what's happening now. We're trading back up above that fib level. So looking towards the new year, as long as price can stay above the fib level over here, then ultimately what I'm looking to do is to target the next monthly fib level, which is way up here at 1135 and change. How far away are you thinking that's likely to be? That is a good 1,607 pips away. Perfect. So there's more than enough on the table to make a valid return on time invested. So look at price maintaining these highs, and then we could target that level. Heaven forbid the US dollar comes up with some really negative figures and that pushes back below, then we're likely to see price trending back towards these current lows that we've seen recently. Okay, so as it stands at the moment now, for the US dollar Swiss franc, I would still be looking high or long, positive, and I'm looking to see if price can actually physically close 2014 above the 76.4 here at 97036. If I drop down to the daily, you can see that. There we go. On the daily time frame, gives you a better indication of where price is trading in terms of that hesitation level. Everything's looking high. In fact, today's candle we have a arrow, because the last candle we had was, arrow was red. Okay, so clearly yesterday's movement higher, but you'll see that yesterday's movement actually fell to close higher than the December highs. So everything's still positive, but price is still failing to make a new high. And as I mentioned to you, in order to be trading a positive trend, price has to be making new highs on that trend. Clearly not the case. We are seeing the bias to the upside. In fact, the last 2 days, in fact, Wednesday and Thursday have been very, very positive, moving higher. But yesterday, even though we traded higher, she still closed lower than the daily highs or the current monthly high for December. So it's imperative that today or any other day going forward into the end of 2014 makes a new high through December for us to actually warrant entering for trade to even target that long-term sentiment or fib level at 61.8 to the upside. Okay, so that's what we're looking for at the moment now. As long as she still trades above the monthly fib level, the bias should still be look for bulls. Long-term sentiment over here on my indicator box. See monthly, weekly, daily, 4-hour, predominantly blue. Yes, we've seen some intraday negativity here, but that's intraday. That changes every single 5 minute, every 15 minute. That's just going to happen. That's just the ebbs and flows of movement within the day, which builds up to our daily candles, our weekly candles, and our monthly candles. The long-term sentiment, however, is going to tell us the bias on these time frames has been up, so therefore we should still be looking to trade with that upside sentiment because it's clearly been building a positive trend to the upside. Okay, so we crazily be trading against it, rather trade with it. There we go. So that's what we're looking for the US dollar Swiss franc for the end of December and going into 2015. Last one is the US dollar Japanese yen. Here again on the monthly, notice my long-term sentiment here, looking straight away at the indicators. Monthly, very, very positive. The weekly, positive, bar the parabolic SAR. Clearly, prices moved higher, and there's a valid reason for that. Daily, starting to see a little hesitation here, especially between these ones over here. That's clearly, there's a reason behind that, and I'll show you. But clearly, you can see the bias here long-term has been up, and you can see since 2010, in fact, we've not seen any new lows, and price is actually making new highs, and the US dollar has rallied very aggressively against a very weak yen, even over the last couple of months, really, really pushing higher when we had almost 7 months of consolidation at the start of this year. Patience, and you'll be rewarded, and surely enough, the last couple of months have been very, very profitable, should have been very, very profitable for a lot of you when we saw the break of that institution, but also getting out of that consolidated range. So, quite clearly see an all-time low to an all-time high. That's my monthly fibs. Bang, done. Took me no less than 2 seconds to apply. But you can quite clearly see how price actually been moving to these points over the years. In fact, you can see here the 61.8 has been a major level of support for price since the 1990s, in fact. And a lot of hesitation occurred through 2014 at this same level, moving towards it, getting above the 50%, finding a bit of support and kicking on. And look where price is trading right now in conjunction to the monthly fib levels. At the 38.2, which is my 11992 And you can see how this month, in fact, we've seen a lot of hesitation. The actual candlestick at the moment now is looking indecisive. Spinning top, a lot of wicks both to the downside and to the upside, as both the buyers and sellers are competing with each other at this level. They want to move higher. The bias has been moving higher, so they're trying to attempt further bulls in the market. However, a lot of profits been taken as we've headed into this major support and resistance level, or the fib level, because as I mentioned to you, if you are buying down here and you're looking to a target, which is what you clearly want to be doing, you're going to be looking in and around this area as a valid target, because its price is consolidated in the past. And people are now, as they've headed into this area, are starting to take more and more profit off the table as they've headed into this level. So you're likely to see price becoming more speculative, more hesitant, more range-like as we head into here, because you find there's less buyers on board, and the sellers are trying to take advantage of that, and you see this fight between the buyers and sellers at a level of major support and resistance level. So when we drop down to the weekly time frame, you can see that last week's candle, in fact, actually was a bearish engulfing candle after a very bullish candle the prior week. Now, what we wanted to see last week was, in fact, prices actually pulling back, which is likely to happen when we see a breakout. We saw a breakout candle. We want to see the pullback actually happening and retesting 38.2, but we wanted the end of that candle, or the end of that week, to actually indicate a close higher than the monthly fib level, to constitute that prices versus the bull main sentiment was still very much direction to the upside. That failed to materialize. We saw more and more people taking profit, which saw a bearish close. So this is almost a tweezer top formation. We call this a tweezer top, or railway tracks is another terms are used, but a tweezer top, which is an aggressive bearish sentiment candle. And you can see that the start of this week, in fact, we saw further selling. However, as we've headed into the end of this week, we saw the US dollar getting a bit more strength against a very weak yen. And now what's happening is prices moving back to the underside of that 38.2, which is the 119.92. Now it's trading at the underside of the monthly fib level. If this week and the last week going into 2014 fails to get back above that 38.2, then you're likely to see a greater pullback. There's going to be less buyers, more sellers now start to take more opportunities, and we could see a greater pullback. But the bias is still positive, so we're still looking for those bulls. The thing you've got to do is, if you're looking for, if price has not made a new high recently, but the bias is still positive, you've got to then say to yourself, great, part of my strategy is I need to see price making a new high. As I mentioned to you, if you're in a bull trend, price has to be making new highs in order to be, and vice versa. If you're in a negative trend, price is going to be making new lows in order to dictate that. At the moment, we've had a greater pullback. Last week's pullback was a very bearish one, and engulfed the prior weeks with a building, and it's got us back below the monthly fib level. So if I want to be trading a bull move, I've got to be above a major support and resistance level, which happens to be my monthly fib level. Because if I'm trading below it and it's bullish, then I'm trading into a lot of resistance. I hope that makes sense. So now, I'd ideally like to see price trading back above the 38.2 or the 119 by the close of this week. If she hasn't, then my bias going into the end of 2014, in fact, is you're likely to see further pullbacks, selling pressure, if it makes any sense. Okay, so that's going to be very, very interesting as we head into the end of this year. You can see clearly here, if I drop down to the daily, we had a nice bullish engulfing candle on Wednesday, Thursday, very small range, and today on trading, you can see prices moving higher. Yesterday was an indecision candle. We don't trade indecision, we trade decision. So very, very important that we see prices moving and trading, hopefully closing higher than 38.2 to give us that. So as it stands now, the bias for the US dollar, Japanese yen is one of positiveness. However, it's consolidative. It's bullish consolidation, because it's consolidating at a major support and resistance level, which in this case is at 38.2. Got to get above it to see any further buying opportunities for the start of 2015 going forward. I hope that's made it clear, guys. That's the four majors. I know I've gone on in a lot of detail for these ones, but I want you to get an idea of what you should be doing and how you should be planning and how I go about actually looking for opportunities in the market. So I'm going to leave you with that. I hope you have a fantastic festive season with family and friends. I hope you get a lot of rest so that when we head into 2015, when you come back, that you guys are nice and refreshed, because 2015 is going to be a very interesting year. Oil prices likely to keep falling. It's going to be interesting for ruble, for the Russian market. It's going to be interesting for a lot of other currencies that are dependent on very high oil prices for their GDP. I hope you have a fantastic trading day, and as I always keep saying, trade serenely.